Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Tuesday, the 9th of May. Starting off with the S&P, and it's still a story of trying to break that line of resistance there from back in August, 4150, the nominal level there, looking for an end-of-day close above that to take us up to 4300. Perhaps as soon as the end of this month, but obviously more realistically by the end of next month. Two decent rebounds for this market above a rising 50-day moving average, which in itself would be taken as a continuation signal of the recovery. I would actually predict the 4,300 target. Also had a couple of bounces for the RSI, just in the 40s, in fact, rather than the neutral 50, but still, that is also a positive in terms of the momentum that appears to be building. This stage only well below the 50-day line, 40.40, would suggest that we're not going to break higher and may even indeed have to test that 200-day line at 39.70. But the fact that both the 50 and 200-day lines are both rising rather does suggest that we are in a bullish kind of mode. On to the stocks. And the first one looking pretty chirpy at the moment, Carvana. Here you can see that we've managed to break higher within this rising trend channel near the lows from back in November, above the 50-day moving average, the blue line there rising already around the $8.30 level. Above that, looking for at least the 200-day moving average around $16, and then up to the $21 level at the top of that rising trend channel from November as soon as the end of next month. If you're cautious, I suppose you want to wait for clearance of the $11 area, which was or is neckline, post-March neckline resistance for the stock, but maybe that will happen today. One of the stalwarts of the US chart breakers, one of our favorites in other words, is Fisker, on the basis that we had the bear trap gap reversal at the end of last month. We've broken back above the 50-day moving average around $6 with a V-shaped bull flag, and above that $6 area looking for as high as $8.50 by the end of this month, which hopefully will now happen after that V-shaped rebound that we've seen. Another stock of interest for the bulls at the moment is Grab Holdings, and here the reason for the relative enthusiasm is the break of that January resistance line, the break of the 50-day moving average at $2.95, and above that we're looking for as high as $4.15 by the end of this month, helped along by the way that the 200-day line is rising quite sharply. Next up, one of the best stocks that we've been covering over the recent past, largely due to its own wonderful performance. So breaking the neckline area around $2, targets up to $3, and then recently up to $5.10, above $5.10 we're looking for as high as an October resistance line projection, heading for $10 as soon as the end of next month. And the way things are going, by the end of this month. So looking very impressive indeed for ImmunityBio. Moving on to a new stock for this week, which is Imperial Petroleum. Here we've had a bear trap gap reversal through the 50-day moving average around $2.80, and above that we're looking for the top of a broadening triangle from back at the end of last year as high as $6 as soon as the end of next month. This stage only well below $2.20, and the old March-April support area really delaying the upside scenario, which is helped along by bullish divergence. So lower low for April-May, but higher RSI trace, so that is impressive along with the gap. On to another stock which looks as though it's got legs, Innodata, and here a broadening triangle formation on the daily chart above the 50-day moving average around $7.25, looking for $10 as soon as the end of this month, and the stage only well below $6, delaying the upside scenario. A stock which is new here is MoneyLion, which is roaring into place with the breakout of that falling wedge from January, break through the 50-day moving average around $15.20, and above that we're looking for as high as $35 as soon as the end of next month. So the whole bear trap effect from below the old December support area around $13. So we've done well to reverse the pattern there. Another riser, which looks like we can rely on it, is Opendoor Technologies. Here we've broken out of a triangle there from the end of last year, broken through the 50-day moving average at $1.60, and above that looking for $4 at a resistance line rejection from the start of November. Hopefully we can hit that $4 level by the end of next month. Stop loss on this stock really $1.60 and the 50-day line. Shopify continues to go from strength to strength, not only because it was a requested stock just as the rally was getting going, but also because we've gapped higher and managed to build on that gap. The floor of the gap there, or the top of the gap there, around $55. Above that we were looking for $64, which we've hit, and the view now is an end-of-day close, or the end-of-day close above $64 could take us up to as high as $90 by the end of next month. That would be obviously quite a coup. In terms of the stop loss, really anything on the wrong side of 60, probably the best place at this stage. Just 3 situations to go now. First one is Trevana, and here you can see that we've had vertical turnaround off the lows, which is always appreciated. Breaking well above the 50-day moving average, old neckline resistance around $2.40, and above $2.40 looking for $5 or more by the end of next month. The more end-of-day closes we can get above the 200-day moving average at $2.90, the better and the more confident we would feel. On to the last 2. First up is ZScaler, which looks as though it's ready to rebound off the floor of that falling wedge there. That's around the $86 level, and above that looking for the top of the wedge there at 95. But the big fireworks here probably come with the break of 95, leading to the 50-day moving average as we've got at 107. On the upside, we're looking at as high as $150 over the next 1 to 2 months, while we remain above the support on the way down, which was $99 back in April. So above 99, looking up to $150 as soon as the end of next month. Finishing off with something which looks very encouraging indeed, not only because it's in the maybe the right type of fundamental space, lightning Emotors, but also because we've got this turnaround here at the lows, and we've got a break out of that falling wedge, that break happening around $5.20. Also a bear trap gap reversal, so but sub $5 really, the lows there are down below $3, sub $5 looks like a bear trap. And the longer we stay above the $5.50 area, the greater the chance of a move up to as high as $17 at the top of that broadening triangle from the end of last year, maybe by the end of June, if everything goes well and we get a rally equivalent to what we saw from the end of December on to the beginning of February. That's it for me today. More updates tomorrow.